I think the biggest driver of fundraising environment today is the fact that over the last decade, roughly, the investors have been significantly overexposed to private markets. So cash outflows into the private assets have significantly been higher than cash inflows from private investments, private funds, and the distributions have not been as great. And then the situation was dramatically worse in 22, 23 when markets collapsed and distributions basically stopped. I think on one side, and I think not all investors are sort of the same. What we're seeing is that there are obviously segments of investors who are more institutionalized, larger funds who are more focused on basically certain asset classes and are dedicated to certain geographies or dedicated to alternatives. They might be hurt more than others just because they don't have public assets in their portfolio. If you look at the public markets, they have performed overall versus 22. They've performed quite okay. So investors who have a more diversified portfolio, investors who are also owning maybe some companies directly that are cash flow generative, such investors have obviously more cash. Usually, a lot of these investors are family office type investors or maybe corporates that are generating cash flow. So I think depending on the segment of the investor that you're targeting, the fundraising could be different. I think for Flashpoint, our main focus and main client so far has been a family office type investor, people who are looking for diversified opportunity and who are basically trying to build relations for long term with the manager, but also looking for a combination of direct fund investments and direct investments. So I think this category and this niche of investors will continue deploying capital into privates, into alternative segments in 2025.